Come here, Matt. I don't want to.
We're not under our photos?
No.
We don't know what we're not. We're trying to figure out if we should be behind our photos or if we should be in the order they told us to be in. So if you can't hear us for a while, we've destroyed the whole audio-visual plan here. But despite that, because we're talking about a great topic, which is about the big opportunity in Africa for FinTechs. So hopefully, despite the fact that you may have to go back and forth between hearing us, you're going to learn a lot about what can be done. We've got a great panel, a very diverse panel. We have two excellent FinTech representatives. We also have if you will, a more classical commercial bank represented across many countries in Africa, and we have a regulator. So we have about everything you could want to learn about why you should be thinking about Africa as the big land of opportunity. Now, I'm Matt Gamser. I'm the head of the SME Finance Forum, working at the International Finance Corporation. I'm going to let my panelists briefly introduce themselves, and then we're going to dive straight into this great opportunity, but also a great challenge that is Africa. So I'm going to start here with Matt. So we have two Matts sitting together just to completely confuse you.
Hello, I'm Matt. Also Matt. Real briefly, I've been working in Africa my whole career, starting in 2004 when I started the world's first person-to-person lending company called Kiva.org in Uganda, and Kenya, Tanzania, eventually spread all over the world to Southeast Asia and Latin America, and et cetera. More recently, I've decided to start a bank in Africa. So we're about 6 years old. Our name is Branch. That means we're a bank branch in your pocket, but we have no branches, so it's sort of confusing. But we have gotten banking license in all these countries in Africa and have an app, and we give people small loans and allow them to save money as well and pay bills and send money to their friends. So 6 years in, still going well, and I'm glad to be here. Thank you.
Thank you, Matt, and thanks to people like Branch for giving us a whole new technology and a whole new nomenclature, the nano-lenders of the world.
Nano-lending, I guess.
So over to you, Mansa.
Yeah, thanks. So my name is Mansa Nete. I work at Standard Chartered Bank. I'm the CEO for Standard Chartered Ghana. Standard Chartered has been operating in Africa for over 150 years. In the country that I'm based, Ghana, we've been there for 125 years. We're in 16 markets across Africa, and we understand Africa very well. But we're the traditional bank Matt referred to earlier.
So thank you very much. And now over to you, O, to tell us about one of the greatest brand names, I think, that I've heard in FinTech for a while, Flutterwave. It gives a very energetic image, but tell us more about what's behind the energetic image.
Absolutely. It's great to be here. Thanks for having me. My name is Omo Shalewa. Everybody calls me O. I'm from Flutterwave. We're just about 6+ years old. We are an African FinTech focused on building a unified digital payment infrastructure for the African continent. We operate in about 20 countries on the continent today, facilitating the collections and disbursement of digital payments for businesses and individuals.
Okay, and so certainly last but not least, let's learn more from Soraya and the Bank of Rwanda.
Thank you very much, Matt. Good afternoon, everyone. My name is Soraya Hakuzieremi. I'm the Deputy Governor at the National Bank of Rwanda. So the National Bank of Rwanda is a central bank of Rwanda. We are an integrated regulator regulating banks, insurance, microfinance, pension funds, and including FinTech, as we regulate each FinTech according to their activities. So happy to be here.
Great to have you. And I see that I don't need to remind the audience, we already have a question that's been asked, but please at any time use Slido, and we're going to try to be interacting with you just like we're going to be interacting with each other. I mean, let's turn to talking about the opportunities that exist, and in many cases, just like many parts of the world that you're not familiar with, you get a lot of bad news out there that make places that you may never have been to before seem difficult or unduly challenging. Why should we look on Africa, and particularly from the perspective of FinTech, as a place of opportunity more than one of challenge? You want to kick off with that? Why don't we start from Soraya all the way down at the end?
I believe probably to give context to one, why Africa is an investment destination, especially for FinTechs. We've seen over the last 15 years, I think the greatest growth in FinTech activities on the continent started by mobile money. As you know, the first mobile money services or service providers was born in Kenya, in East Africa, one of our neighboring countries, 2007. And in Rwanda, we also had our own mobile money operator starting in 2009. And what it has done is really, foster financial inclusion. People who didn't have any bank account, who could not transfer money electronically, all of a sudden could start paying school fees, buying their groceries using their mobile phone. And at the time, just to give you an idea of the growth rate, and probably Matt and O will speak more about it, in 10 years ago in Rwanda, only 0.3% of our GDP was the volume of electronic payments. Today, we have 112% of GDP, representing roughly 10 billion that goes through the electronic payments. So the growth has been substantial. The number of subscribers, we are now at close to 84%, which went with the adoption also and ownership of mobile phones by 87% of our population. So this is only an example of one country, not the largest in Africa, but when you take that to a continent of 1.3 billion people, you can see the potential of challenging, disrupting financial services and allowing access to financial services to our population.
I remember being at a meeting in Africa in 2018 where someone shared the statistic that as a continent, Africa had the highest proportion of adults who were actively using a mobile money product of any continent in the world. It was higher than Asia, it was much higher than Europe and North America, and higher than Latin America. So very much as you're describing, gives a really good base to build on. Maybe if you could elaborate on that, Mansa.
80% of Africans across the continent have mobile devices. So that shows the potential. And in addition to that, we have a youthful population, so the demographics just speak for why Africa is so digital. And if you look at the median age is about 20 years compared to 28 in India or 37 in Europe or China. And this youthful population are extremely creative. And if you look at even mobile technology and what it has contributed to GDP across Africa in 2021, it's about $144 billion. And in 2025, it's forecasted to contribute about $180 billion. So there's clearly a lot of value for those who are looking to invest in Africa. And people just look at Africa because they see the challenges, but clearly there are the opportunities as well.
So, we have a bunch of questions that have come in on challenges. I hope the panel can look at them, and we are looking at your questions. Let me turn to O at the moment, because, and I'm going to get Matt in on this too, because while it is a place of opportunity, let's remember that in Africa as a whole, there are 55 countries. And no one country has anywhere near the share of the market that, say, India does in Asia or China does in Asia. That the biggest markets, Nigeria and South Africa, are still relatively small markets by global standards. So as a payments company trying to be cross-Africa, what are you finding as the challenges that come with these opportunities?
Yeah, I think you've set some of the context. We have 54 countries on the continent, 41 currencies in circulation, over 300 types of digital payments that aren't always interoperable. And so for Flutterwave, that was the key problem that we wanted to solve. And it hasn't been the easiest challenge to solve, but it's been one that's been rewarding to watch how it's transformed how digital payments occur on the continent. I think that going into the market, you have to expect I don't want to say that digital payments in some of the other parallel countries that you've mentioned, like India or China, are easy. But to a certain extent, they are easier because you're looking at a singular currency. You're looking at a somewhat similar group of people with possibly similar consumer behaviors. And in Africa, all that could change as you cross from one country to the other country. So.
Very, very important points. One of our questioners within this context is asking, what are some of the less obvious success and risk factors? Matt, you want to venture some stabs at that?
Less obvious. Well, I would say, I live in the USA part-time, and in the USA, FinTech is really icing on the cake of a financial infrastructure. But in Africa, I would say FinTech has the opportunity to be the cake. So we are building a lot of the infrastructure from ground up. That means you can get a banking license, which is so cool. There's so many creative things you can do once you obtain a banking license. But try to get a banking license in the US, that might take 2 decades. Try to get one in India, that might take a decade. But in a lot of these sub-Saharan African countries, the regulators are quite flexible and quite honored that you're entering that market. So there's an opportunity to meet them, work with them, and become a real legitimate bank. So we've been able to take deposits and conduct banking activity all across sub-Saharan Africa, which is really opportunity to be creative and to serve your customers and be truly useful versus in a lot of countries where it's very highly regulated and there's existing monopolies that dominate the banking sector. You can't really get to that level in the stack, the payment stack, which is really cool. So I'd say that's one of the main upside opportunities that gets ignored a lot by people trying to enter the space.
So the good side is that you do have a lot of real understanding, as we've already heard from Soraya, that many of the regulators are very open because they see that inclusion is only going to come through going through a different path than, if you will, the more developed countries and their financial sectors have gone through. But on the other hand, you do have 55 different discussions to have in order to get to that wonderful, millions, tens and hundreds of millions actually almost 1 billion something in Africa, right, if you add all the populations together. But you do have to do it 55 times. What about from the standpoint of the established bankers? I mean, I think one of the things that's also true in Africa is that the bankers themselves are more flexible about how they deal with FinTechs, wouldn't you say?
Yes, I mean, I can give you an example, Matt, as to how Standard Chartered Bank is working with the local FinTechs. And, with SMEs is companies, enterprises that really drive the economic development of every country. But there are challenges. And I can summarize the challenges in three points. The first is the cost of financing for these SMEs. The second would be the access to buyers and suppliers. And the third would be access to low-cost professional services. So as a bank, our SC Ventures arm, which is, there's a booth out there, so I would encourage everybody to go out and look at the SC Ventures booth. We're launching across Africa a platform called Solve. Now, what Solve seeks to do is that it's an SME platform, so it's a B2B marketplace for SMEs. And we partner with other financial institutions. We partner with buyers and suppliers across the world. And we partner with also other professional services. So the SMEs can, through this, access low-cost professional services, and they can choose whichever bank they want to for efficient capital. So this has been rolled out, currently launched in Kenya, and it's being rolled out in Ghana, hopefully by the end of the year. And we're working with local FinTechs to develop this in Ghana. So huge opportunity to solve a problem in the country.
And that's really interesting. So we've got a 150-plus-year-old commercial bank that is talking about all this work they're doing way outside what we would have traditionally considered the domain of bankers to basically create a whole ecosystem for SMEs where you're not only dealing with the financing, but you're dealing with the access to markets, you're dealing with the business skills and professional advice as you described. Now, there are other, I mean, if anybody from DBS is in the audience and UOB and others, I know this happens in Asia too, but you're seeing it's not only, you don't have a monopoly on innovative thinking of long-standing banks in Asia, and maybe that's a good reason why the FinTechs among you should think about, don't write off African banks. They're in some ways just as forward-thinking as many of the ones you're dealing with out here. Yes, go ahead. Oh.
I think ultimately, as FinTechs, we recognize that we don't exist in isolation of banks, and a lot of the innovations that we're able to build, roll out, come to these events and talk about are with support of banks, right? We're not, until recently, we're not really financial institutions. We're good at building technology, we're good at scaling technology, but a lot of that expertise in providing financial services, or even sometimes a lot of the regulatory coverage that you need, still has to come from a traditional commercial bank. And so I think when banks and FinTechs come together, it's really a beautiful sight to see because of the solutions that you can jointly roll out to really advance financial inclusion or just the consumption of technology in the financial services space.
Great. And Soraya, we have a question from the regulatory side. I mean, what are some, from your perspective, what are you seeing as the type of regulatory challenges that can inhibit growth of FinTechs? And what are you doing as a regulator to try to create an environment where you can encourage a more faster, innovating, and open and competitive financial sector while keeping stability and integrity, but not a hard thing to do, right?
No, I do agree that there's been challenges even for regulators to try and catch up with the fast pace of innovation in the financial services, which is tech-driven. So, for instance, to give you an example of how even mobile money was regulated, it was very hard at the time for a central bank to understand that they have to regulate an activity by a telco. They were like, you're a telecom company, why should I, as a central bank, regulate you? But also they were seeing the benefits of that payment services. So there had to be a sort of guidelines and learn along the line. It's learning how that technology works and try to adapt a payment system, supervisory regulatory framework to telcos. But then on the other side, FinTech have to learn how to deal with financial services regulators. And today we see a lot of young people that are excited to offer their solutions, but what we tell them is, yes, you're a technology company, but now you're going to offer financial services. So there are constraints to that, because as a regulator, we need to make sure that, one, as you were mentioning, we have financial stability, that we protect the consumer. And there are governance, constraints around it. There are, let's say, data protection around it. And sometimes it feels cumbersome for those young entrepreneurs to go through that licensing process. So what the National Bank of Rwanda has done, as many other central banks, and I think MAS is a good example, is to put in place the regulatory sandbox, where we give the opportunity young entrepreneurs to test their product and solution in a regulated environment for 12 months, and also to learn about all the licensing criteria. So we've now had, I think, 2 cohorts of FinTechs that are going through our regulatory sandbox. And we have to admit that as a regulator as well, we're learning about those technology. So there's a fundamental change as well on how regulators approach these innovations, not to see them as risky technologies or players that are bringing more risk to the financial services, but to try to understand what they're trying to solve as issue. And we talked about inclusion, but also costs of services, and to really learn along the way. And where we'll challenge to review our regulations in place, we've done it as National Bank of Rwanda. And case in point is, because we have established since 2020 our International Financial Center, up to 12 regulations and laws have been to be adopted as Rwanda positions itself as a FinTech hub for Africa. So it's still a journey, but I think the step we've taken to really work with the FinTechs to establish the best regulatory environment has worked.
Very interesting. And we have a quite provocative question from one in our audience here. Why are there about half a dozen FinTech unicorns in Africa, I'm assuming, yet less than half of Africans are banked? Do our FinTech folks want to opine on this?
I think first it depends on your definition of banked, right? If you're talking about traditional bank accounts, then probably that stat or that statistic is correct. I think with many other technologies, what we've seen in Africa is we leapfrogged against some or leapfrogged across some of the more traditional technologies that you've seen in other parts of the world. So while many Africans might not have a bank account, it doesn't mean that they're excluded from financial services. They have mobile wallets with the network operators, or we're starting to see non-network operators launch their mobile wallets. Banks now have their own mobile wallet. So I think that stat might be just a little bit skewed. That's not to say that there's still not a lot of work to be done in getting more people access to financial services.
Yeah, and I'm even seeing meta wallets develop in Africa so that you can enable your different wallets to all be used in the right applications, which I don't recall seeing in any other market. But because of that huge number of countries and lots of different systems that you have to work with, it makes perfect sense.
Yeah. Matt, if I can just add to that. So the point O was making around wallets, and I think and the issue around financial inclusion. In Ghana, what we did was that working with the national switch, the 24 banks collaborated together to create an industry wallet, a bank wallet, to promote financial inclusion. And through this, technically, the vice president's vision is for every Ghanaian to have an account, whether it's through a wallet or it's through a traditional account, it's still financial services being offered. So I think that there's a lot that we can do, but there's a lot being done in collaboration with FinTechs, banks, and we are coming together and working together to address the financial inclusion issue.
Just to add, I think the key challenge, the key reason why there are half dozen FinTech unicorns is the size of the GDP of these countries. So you have to be willing to work with large populations of lower income people, which is a really challenging thing to do. Most of our customers will make less than $5 a day, and you have to be able to figure out a way to serve them with deposit taking and lending, even with a higher default rate. And all those things that essentially the low GDPs relative to, say, European countries or Asian countries is probably the central challenge and why so few have become unicorns up to this date.
Yeah, plus you've got, in addition to lower GDP, you've got lower literacy in many cases.
I don't know about that.
And you have other issues where figuring out how to add other services as a part of it, as you were saying, whether they're financial services like deposits and longer term wealth management at the level of a very tiny operator where there isn't a lot of precedent, right? You have to figure out your own solutions. But that just means there's more opportunity for creative people, right?
Yeah.
Because the market's so untouched.
Yeah, and Matt, I can just give you an example of, Standard Chartered, for example, in the markets that we operate in, we are very keen to lift the participation of the citizenry, and including women. So you look at the number of women entrepreneurs across Africa, globally, you realize that Africa has the highest number of women entrepreneurs, and Ghana and Uganda are known to have the highest. And what we've set up a program in Ghana to support, talking about impact, to support these women entrepreneurs. So what we then do, and this is not just in Ghana, it's across 7 of our markets across Africa. So what we do is we provide seed funding to these women entrepreneurs that have a technology link based business. And we provide management training as well, and also mentor them. So in a way, we're just giving back, traditional bank giving back to the society by encouraging women entrepreneurs to use technology to scale up their business.
Yeah,
Very
and Matt, I wanted to
Yes,
come back
please.
to probably the question on banked and unbanked population. It's true that FinTechs today, the majority of them in Africa address the payment, remittances, services. But from that, where you have low-income population starting to transact in a formal way, then that's how also they graduate and gradually start saving. And now we have more and more FinTechs that are offering digital lending services, micro-insurance. So I think it's a gradual, sort of adoption of financial services that also goes with the level of growth in income. So when, what you need, what you have as income, you're going to only use it for basic needs. The real financial transaction you need is the payment, transfer money. But once you have to start extra income to save, once you start your own business, then your needs, financial needs, become more sophisticated. So I'm really confident that 10 years from now, we're going to have more services that are going to be done digitally, and probably people won't even have a bank account, but they will use their mobile wallet. In Rwanda, we have now a project where people can start investing in government bonds through their mobile, so they don't need any bank account. So I think there's also, that understanding that O was mentioning, define unbanked. So the fact that you can have all those services probably without having a banking account but a mobile wallet, then we'll see, that people have access to more services without, going through banks. I know it's a challenge for commercial banks, but a good thing is they're partnering with these FinTechs to offer those services as well.
And we have some very sophisticated questioners here who are asking about, as you're getting more people digital, there's more data out there, but how do you ensure that that data is in a form, in a common reservoir, if you will, where there's competitive access in the financial sector to it, so that you can make these, because to make these decisions about how to diversify services and things like that, you often need much more data than what your direct customer relationship gives you at a time. What's happening in Africa about that? How are regulators dealing with? How, as an industry, are you working with your regulators to help them in this?
We've had a few engagements with regulators, with worldwide organizations who are conducting studies, putting together information, trends on technology, FinTech in Africa. But I do think there needs to be a more concerted effort between private entities and government entities like regulators to have a project that tracks officially some of these metrics and gives access to all market participants. I'm not personally aware of any such projects on the continent, but I think that it's the next evolution of FinTech on the continent.
Yeah, and I can add from the regulatory perspective. One, we had as a government, but also regulator, to put in place a robust legal framework around personal data and privacy protection, because we cannot allow, just the growth of FinTechs or tech-driven financial services without protection of data. So that is already in place, but what we also realize is the amount of data that banks have, you have to have the capacity to analyze, use that data, and then also leverage on it to probably refine your products or expand your products. Secondly, as a central bank, what we have done is start to use also, an electronic data warehouse to track data, from our regulated entities that inform us, one, on the stability and financial status of those banks, but also to track how our population is getting access to credit, be able probably to prevent a trend of non-performing loans. So there's, I think, a use of data by the industry itself, but also by the regulators. What is it that it's informing us, and how can we probably, use that data better to make sure that the products that are on the market are fit for purpose, but also give room for innovation. So there's a need, I agree, to really have regulators, industry work together to harness that data. And we do have actually, even our banking industry or insurance industry saying, you collect data from us, but you're not producing research in us that you can use. So why are we giving us your data? So it's a conversation we're having, but there's a lot of potential in really analyzing that data and in a very beneficial way.
And as we have important new initiatives like the Africa Free Trade Initiative across 55 countries, in relation to this data, we have a question about, well, what about the issues of data localization and how you balance access cross borders, data privacy, consumer protection? How is Africa, from a regulator's, from an industry standpoint, I'm interested in any of our panelists' comment on that, because it's great if you can sort it out in Rwanda, say, but then if you go next door to Tanzania and you got to start from zero,
I know, I'm really freaked out about that. So I'd love to hear from the regulators about this, but we work in India where they recently passed a bill saying all the data has to be stored locally. We could comply because Amazon Web Services works in India. So it's like flip a switch and send it to the Mumbai version of AWS. I'm freaked out that African countries will do the same thing because there is really no alternative to AWS, let's say, in Nigeria. Not that I know of, or in Kenya. So if Kenya says all the data needs to be stored locally, I don't know what I'm going to do. So love to hear thoughts on this.
So that's actually I don't want to say a really big challenge, but in a way it is, right? From a global perspective or from a Pan-African perspective, completely understand the benefits or the desire to want to have data localization requirements. But when you think about FinTechs or really anyone's ability to scale across the continent, it poses a significant challenge.
Yeah, it'd be virtually impossible.
Sorry?
Virtually impossible.
It's impossible. So I head expansion and partnerships, market penetration for Flutterwave. In my 5 years with the company, I've expanded to about 20 countries on the African continent. In the last year, 2 years, we've started to see more and more countries have requirements for data to be hosted locally. But when you look at the premise of what we're trying to do as a company, which is unify the continent
that's good.
and make it easy for you to transact regardless of your payment type, your currency, your country, how do we continue to do that at scale?
How are they approaching this in Rwanda?
No, I think I understand for a financial institution or a FinTech trying to cover the whole continent. One, there's a hurdle of having to get licensed in every single country. And I think the Continental Free Trade Area is addressing that because on the financial services side, they started with the goods, but on the services side, I think in the next 3 to 5 years, once you're a FinTech domiciled in one member country, then you can start offering your services in different, so the sort of passporting that we see in the EU, and that will ease their life. Now, on the data localization, I think there are two issues here. One, there are many countries in Africa which still don't have personal, data protection regulatory frameworks. So if I'm a regulator and I have a bank originating from country X, where I'm not sure what the data protection regulatory framework is, I won't be comfortable having them, having their data center in that country. Now it's being addressed, and we see really progress of a lot of countries working on those, data protection, but also because globalization requires it. And secondly, what we were also, I think, not comfortable with or concerned with as a country was how is that data not only protected, but how is the cyber resilience of the countries where the data centers are located? But I think now it's also a conversation we have with those regional Pan-African FinTech is demonstrate to us how people won't have access to data they shouldn't have access to, how you're protecting it, and how your cybersecurity is. And then from that, I think it's adaptable. But I don't think it's really only an African problem.
Data
and privacy is
I was just going to say, I mean, just so people understand, we're not just we're not going to rank on Africa about this, because what region of the world is not having this problem, right? It's only that there happen to be 55 countries in Africa, whereas there are only, whatever, 27 in the EU. But the EU doesn't have an open market in services either. Just look at how many banks are actually working across Europe and doing local banking in every one of the 27 countries. The answer is 0, right? Because there isn't a common market in services, unlike in goods. So and ASEAN, APEC, you know, who's doing it? Maybe, I mean, I would say there's an equal likelihood that Africa will figure this out ahead of everybody else, just like they figured out mobile wallets faster than any other region. You know, maybe.
If anything, probably a business opportunity for someone to create.
Someone needs to start AWS.
An AWS for Africa.
Quote unquote.
Yeah, maybe because there's more of a commercial imperative because of the small markets and so many of them, that Africa will get to this quicker. Who knows? I mean, watch, maybe you all will be a part of it. Let's see, what else do we have here? Okay. How can Africa has a comparatively bigger underserved and underbanked population. I think we've covered that. How can FinTechs build trust and get the population on board? What role can the FinTechs play in building that important trust and confidence in the market?
I think 2 things. One is making sure that you have a close relationship with regulators and that you engage them in. So let me take a step back. I think a lot of times as FinTechs, we like to talk about the challenges that we have with regulations and with regulators. And I think if we took a different approach of understanding what the financial, monetary, economic, and consumer challenges that a regulator is trying to solve are, and you fit your solution as a solution for one of those things, it becomes a lot easier to get the regulator to understand what you're trying to do and for you to get the support that you need. At the end of the day, regulators exist to protect the interest of consumers and the public. And so if you have that stamp for the regulator, you've gone a few steps forward in being able to cement trust in the public. The second thing is absolutely partner with established financial institutions.
I was just going to say that.
right? People keep their money with banks. People keep their money with mobile network operators. They trust these institutions. If you partner with these types of institutions and you find a way to attach your brand, you've also taken extra steps forward in getting the public to trust you.
So here's a really interesting question that I'm going to rephrase, but I'm going to tell you what the initial question was. The initial question is, what role can the African diaspora play in opening up the FinTech market? But I want to change that question because we don't have that many Africans in the audience, and we have people from all over the world. Let me rephrase that question and give you all 15-second tweets, because we got 2 minutes left, about what role can those from outside Africa, who are living outside Africa, play in helping open up and grow the FinTech market in Africa. You each get 15 seconds.
I'll just say,
but no pressure.
Invest in African startups.
Invest in African startups. That's a great 15-second answer.
I would say don't look at Africa as challenges. If you look at Africa as challenges, you'll miss out the potential. If you miss out the potential, you miss out the opportunity.
Educate people about the African continent, the African people, the technologies that we have, and the things that we have accomplished and are trying to accomplish.
Get beneath what you see on the news. Learn the real story.
Yes.
And finally, Soraya, from you.
No, I think actually Africa is already open to FinTechs. So you have to be part of that movement. Either invest in a FinTech, but also probably to speak to the diaspora. What they have done is really also make sure that the FinTechs active in remittances compete on pricing. So I think really that has been important, and you know, Africa and Rwanda is open for business, so let's work together to make it happen.
Great, well, so there's a great opportunity here. You can invest. If you're already doing FinTech in other places, maybe think about bringing your show to Africa. As you're hearing, there's a receptive environment, whether it's from the established financial sector, from the regulators, or from the other FinTechs. So hopefully we've helped kindle your interests in a very large market that still has huge room to grow. And I hope you'll take the opportunity to think more about Africa, about not only how African diaspora can help Africa, but also how all of us, whether we're African or not, can be playing more of a role in the future of what's a really exciting, and hopefully you're understanding, very dynamic from the standpoint of FinTech and FinTech potential market. So thank you, everybody. Let's give a big round of applause for all of our panelists.